Oh man, so this market is completely rigged. As we saw yesterday, markets dumped over 5% in a single hourly candle thanks to some market manipulation. If you guys were following with me on Twitter, you saw that this was a concoction of mess resulting in people getting wrecked. Another $189 million worth of longs wrecked, along with $130 million of shorts. You can see this just above my head. A lot of shorts liquidated and a lot of longs. What a bunch of market manipulation to liquidate your overzealous leverage positions. And we need to talk about this, guys, because this is what's holding us back in crypto. Anytime we want to have a meaningful move, the degens, the leverage traders with 100,000 X's positions are getting wrecked. And you are easy bait for the big guys. When will you not understand? And this is nothing to do with crypto. I spent my time in traditional finance where I knew exactly how institutions were targeting the small fish, even in stocks, trades, and bonds and commodities. It's the same thing, right? If you're going to be overzealous, if you're going to be a DJ, if you're going to constantly chase long positions and chase FOMO and then get really scared the other way around, markets are going to love it, and the sophisticated players will love it. Let me explain to you exactly the sequence of events that causes, because I'm not buying this at all. Let's jump straight over to my Twitter. If you're not following me, at RealIjaz1, I'm then going to share with you an important chart pattern, because Bitcoin is literally moments away from breaking a critical pattern. I've got to share this with you guys, but it comes with its risks and benefits. What happened yesterday? So we got that huge candle. Now, what initially started that is Bitcoin was having a nice day, right? We made a video yesterday. Bitcoin's having a positive day because of earnings. We spoke about the Microsoft earnings. We spoke about the Google earnings. You saw that First Republic Bank was struggling. Bitcoin likes that narrative, right? If traditional banks are struggling, Bitcoin does positively. So Bitcoin was having a nice swimmingly positive day. Alerts then go out by Arkham alerts, okay? So you saw alerts such as this, where DB obviously posts it based on an Arkham alert saying Mt. Gox and US government wallets are making transactions. This created a huge amount of panic in the market, leading many people, including big funds such as Jump Capital, one of the biggest funds. We can take a look at this here. In the last hour, Jump Trading deposited a total $26 million of Bitcoin to various exchanges. Their main exchange deposit was to Binance, with Jump sending $23.7 million to their BT deposit address there. However, they also sent $2.18 million to OKX and another $720K to Bybit. And you can see the transactions here. So obviously they would have heard news about Mt. Gox and these US government wallets, and whoever the trader is over at Jump Trading just quickly mobilized the funds, put it on the exchanges ready to start dumping. But guess what? That does not need to move the market itself 5-6%. No, when you have cascading liquidations, if you look at this big candlestick here, all you need to do to dump this market, and this is a common fallacy people don't seem to understand, you do not need to have 6%, this is a 6% candle, this hourly candle. You do not need to hold 6% of Bitcoin's market cap to move this market 6%. Absolutely not. You can move the original little bit here, and that cascades, everybody's stop loss and liquidation prices get hit. Okay, and that is when you get this 190 million longs liquidated. $190 million in an hour candle. Horrible, horrible, horrible action there. Overzealous longs getting wrecked, and we're only going to learn the hard way. And this is going to constantly put the brakes and put the dampeners on any upward slow momentum Bitcoin can create. We're creating some nice momentum there, and boom, overzealous longs liquidated again. Now we have to build our way back up. If you're a long-term holder, who cares, right? You just nibbled some more. If you were smart and you managed to get yourself another little nibble, you would have got it as low as 27.2 again, despite the price being close to 30 just hours before. That's where you're smart, right? You set your limit orders and you let them get triggered. Right? So now we need to understand, okay, so what happened there? Was this an innocent bug? Well, they tweeted saying, Arkham tweeted saying, a bug fix deployed today caused alerts to be sent erroneously to small subset of users. First of all, it's not a small subset of users. Everybody heard about it. It was public. And second of all, what kind of bug do you create that specifically says Mt. Gox and the US government are moving money between wallets? It's not a bug. Right? And if you think this is a bug, then you're naive. This is manipulation of the markets. This is not an accident. And you can see that when some of these big funds get literally the jump on you, right? They get the jump on you and they're moving before you get the chance to mobilize. I mean, it's not easy to move $26 million of Bitcoin. Like, I mean, as in, you know, it takes a few decisions. No doubt there'll be a team of people that quickly would have to make a decision. This was coordinated. And that is how they can profit from these liquidations. And that's how they can continuously print money whenever they want to print money. They're just taking it off you, the average unsophisticated investor who's trying their best, but you keep getting caught up in the greed of chasing over leveraged positions. So if you want to trade, check out the links in the description to Binance, to Bybit, but please only do so with what you're willing to lose. And stick to spot. What's wrong with sticking to spot? Why do we have to be so greedy? I know that doesn't benefit the community because everybody wants to sell you, oh, go trade leverage because it makes everybody money. No, trade spot. Trade with what you're willing to lose. Practice, right? Get better. And then when you're more experienced, then you can explore. But just to be doing 100x leverage positions, you're going to get wrecked, and it's not good for the market as a whole. Fear and greed index still sitting up quite well, sitting at 59. And again, understandable, right? Fear and greed index, Bitcoin's doing all right. If we look at it, even if we zoom out over that, the dip was bought quite quickly. If I notch down to the 5-minute chart here, you can see that a lot of the pain really did happen quickly, right? You're sitting there, you're hovering around 29,700, and boom, you start falling, and literally there was no floor until you got to 27,200. Then Bitcoin started creating a footing, managed to crawl itself back up, and now you're in a consolidation pattern here on the 5-minute chart, coming to an apex. And literally you can see this, trying to decide on a direction right now. Be very, very careful of fake outs. Whenever you have symmetrical triangles, guys, I've gone through this so many times, but you can also go through it on ijaz.uk/TA. I've made my whole TA course available for free. When these fake outs, sometimes you can get something like this, and then boom, off it goes, right? Again, what is it doing? Why does that happen? Why does it happen? We've just gone through it. It wants to liquidate all of you guys. All of you guys who are sitting here trying to go short. Oh, look, it's broken down. It's going to go short. Boom, liquidates you out, takes all your stop losses out, and then it goes on the move it wants to go on. Vice versa. If you're overzealous on the long position here, oh, look, it's going to wait, it's going to liquidate you, and then it's going to fall back over. So be very, very careful. It's not as straightforward. You've got to engage your brain, and, it's not as simple as some YouTubers/traders want to make out. If you want to trade, wait for the breakout, wait for a retest, and then on the breakout here, on the second confirmation, with good volume, you got to have good volume, then you want to be taking these kinds of trades. And again, on this 5-minute chart here, what would the price targets be? To the upside, you'd want to work towards 29.2, fine, and then your next level, 29.5, but the more exciting level is all the way to the top of the wedge, working your way back to 30. To the downside, what you then see is your price targets can come all the way down here to where we created that footing, all the way down at 27.3. So this is a critical battle going on now here in the Bitcoin chart. If we jump back into the daily, what I do want to show you is what we were speaking about yesterday. And that is that before the craziness of what we had yesterday, which is this crazy candlestick here, we can ignore that. We've had a nice bounce here from the bottom of our EMA ribbon. And this is all well and good. But we are not out of the woods. And again, I shared this on a thread on Twitter. If you haven't already, go read this thread on Twitter on why the Bitcoin price action right now is a double-edged sword. Okay, because we're in a tricky position. Yes, we've bounced. That's really good. We avoided more painful. We didn't lose our daily EMA ribbon. But this move has to go above 31. If it doesn't go above 31, we're in a little bit of a tricky situation, and we could be forming a head and shoulders pattern, and we could be moving back to the downside. You can see here, we faced a lot of resistance here at 29, right? 29, we faced resistance. Then we got rejected from 31. So if we face similar resistance around that 29, 30 level, this is going to cause us problems. We could be creating a right head, and we could be falling to the downside in a bit of a head and shoulders pattern like so. Okay, so that's what we need to watch out for here on the Bitcoin price. We have to go create that higher high. Even if we only scrape it, right? Even if we just get past 31, I think it's $31,050. We've got to get past that high, and then we're good. Then it can come back down, touch the EMA ribbon again, no problem whatsoever. But for now, it's got to go, it's got to get above that, then come back down and retest. Okay, we can also monitor our ascending broadening wedge. Continues to be intact, right? We bounced off nicely from the bottom here, but again, this is meaningless if we cannot go to the top of the band. We've got to go get that higher high, go in this region here, and then we're still in play. Otherwise, they're going to love this. The bears are going to love it. If we struggle here, we come back down, we risk it, and we start falling back to the downside. So longer term, sitting here on the weekly, there's no reason to panic for me right now here on the Bitcoin price. I mean, we are doing very, very well here on Bitcoin. You've just got to remember that in November time, you're sitting here at lows of 15,500. Even just a couple of weeks ago on the 6th of March, on that weekly candle, you were at lows of 19,300. So where you're at now is doing phenomenally well. And that is why you're seeing the Fear and Greed Index still there at that 59 reading. But there is some levels where we could come down to. On the weekly chart, I feel perfectly comfortable if this wants to come down to that 25,800 level. That's the top of the EMA ribbon. If it wants to go deeper into the EMA ribbon, 25,000 flat. The final core on this EMA ribbon is 24,400. Very important. If we go lower than that, then we're risking losing our weekly EMA ribbon. We do not want to be doing that whatsoever. So we've got plenty of room to play with here on Bitcoin. Come back down, get a bit of retracement, and then go back up. That's fine. But if it wants to go up now, it's possible, but a pullback is always better. right? If you can consolidate and pull back and get the price action, not only do you get some cheaper buys, but also the price has proven to itself that we've locked in 25. We broke through 25, we've retested 25, it's ours, we own it. We're not going below 25 anymore, and onwards and upwards we can go to the rest of our journey. And again, just checking in here on our Fibonacci ratios. Remember, we took this from swing low to swing high. I've not touched any of these drawings since our last video. You could go back and fact check this. We fell to the downside. I said, guys, look out for support at the Fibonacci golden pocket ratio. Sure enough, we bounced exactly there. We bounced at that 27,200 level roughly. And then I said, okay, now we need to work into the next level, which is 28,800 at the 0.786 line. And you can see that's exactly where we're now working our way to. But we've got to do exactly what my yellow line is there, right? I'm not going to change it. That's exactly what we need to do. We need to break through this level like we were trying to do yesterday. We managed it before the liquidation. So it's annoying because it's just kind of set us back a step. We got to get back above there, break through it. No issues if it wants to retest. If it wants to go back up, come back down here, retest 28,800, and then go on the surge to finally break above 31,000. Okay, that's what we need. That's what we need. What we don't want is to soften off here and start cooling back down again. That would create a lower high. Then we have a risk of creating a lower low, and you could be forming something like this. So what we don't want, this is what we don't want for the record, is this, okay? We do not want to be downtrending like this. This is a good scenario. Go back up, curl off a little bit, but then quickly get support, push through 31 with good volume. That is what we need here on the Bitcoin price. Now, you could make an argument here on the daily chart also that we also have an inverse head and shoulders pattern. This is a bullish reversal pattern. And in many extents we do, right? If you want to take a look at this, you've got your left shoulder, you then form your head, and then we would have formed our right shoulder, which didn't quite form. Then we had our liquidations. So we could have a bit of a modified inverse head and shoulders pattern. It's completely feasible. But in order to do that, it's got to do exactly what I just said. We've got to go and create that higher high. We've got to get above 31 and work our way to the neckline. So if we can work our way to the neckline, then things look really exciting. Because then if we get a break of the neckline and a retest, boom, this can then take you to your next price target. And that could be another explosive move. So watching for two moves here, really. One is the initial move. Can we get to 31,000? That's going to be important. But then thereafter, if we can hit that, then you're looking at a very interesting measured move. If you want to take the measured move here and apply that to the point of breakout, let's say you break out somewhere over here, it's going to probably need a little bit longer. Then you're looking at this move potentially taking us back towards that 40,000 level on Bitcoin. So this is a very important moment for Bitcoin. Can we get to that 31,000 level? Because if we do, then this inverse head and shoulders, slightly modified, starts to come back into action. If we don't and we curl over again, then we need to look for support back at this red line, which is that 25,000 level mark I've shared with you. So much going on in the Bitcoin price action. Watch out for that manipulation, guys. Everybody wants such a binary, simple outcome. Oh, look, go long. Oh, look, go short. No, it doesn't work like that. You've got to engage your brain. You've got to be data-led. You've got to follow the things that are coming out, right? Earnings will be coming out. Different information will be coming out. There'll be more manipulation in the market. You've got to take the theory, take the lessons, and then apply them. Hope you guys enjoyed. Don't forget to smash up likes. Don't forget to subscribe. If you watched my video from Phantom yesterday, you need to check that out because there are some huge developments. I'm not exaggerating. There are some huge developments on Phantom that could be leading to 100x on this project in a matter of months. Guys, smash up likes. Don't forget to subscribe, and I'll see you in the next one.